Greetings to all. I am Dr.T.M.PREMNATH, Assistant Professor, PG and Research Department of Commerce, Bishop College, Trichy. Now we will be discuss about a small topic from Cost Accounting 2. Our topic is standard costing, meaning of standard costing, definition of standard costing, objectives of standard costing, advantages and disadvantages of standard costing. First one, meaning of standard costing. Standard costing is an accounting method that helps businesses estimate their cost by establishing predetermined standards for direct materials, direct labor, and overhead. These standards are set based on historical data, market trends, and other factors that may affect the cost of production, goods, or services. Next one, definition of standard costing. According to ICMA London, standard costing is the preparation and use of standard cost, the comparison with actual cost, and the analysis of variances to their causes and points of incidence. Next one, objectives of standard costing. It helps to implement budgetary control system in operation. It helps to ascertain performance evaluation. It supplies the ways to utilize properly material, labor, and also overhead, which will be economic in character. It also helps to motivate the employees of a firm to improve their performance by setting up a standard. It also helps the management to supply necessary data relating to cost element to submit quotation or to fix up the selling price of a firm. It also helps the management to make proper valuation of inventory. It acts as a control device to the management. It also helps the management to take various corrective decisions, fixation of price, make or buy decision, etc., which will be more beneficial to the firm. Next topic is advantages of standard costing. Standard costing serve as a guide to the management in several management functions while formulating prices and production policies, etc. Next one, more effective cost control is possible under standard costing if the same is reviewed and analyzed at regular intervals for improvement, and immediate action can be taken if deviation from standards are found out, which ultimately leads to cost reduction. Analysis of variances and its measurement helps to detect inefficiencies and mistakes, which enable the management to investigate the reasons. Since standard costs are predetermined costs, they are very useful for planning and budgeting. It also helps to estimate the effect of changes in cost price volume relationship, which also helps the management for decision making in future. As standard is fixed for each product, its components, materials, process operation, etc. It improves the overall production efficiency, which also ultimately reduces cost and thereby increases profit. Once the standard costing system is implemented, it will lead to saving costs since most of the costing work can be eliminated. Delegation of authority and responsibility becomes effective by setting up standards for each cost center, as the supervisor or executive of each cost center will know the standard which they have maintained. This system also helps to prepare profit and loss account promptly for a short period in order to know the trends of the business, which helps the management to take decision promptly. Standard costing also is used for inventory valuation purposes. Stock can be valued at standard cost, which can reduce the fluctuation of profit for different methods of valuation for the same. Efficiency of labor is promoted. This system creates consciousness among all employees, executives, and top management, which increase efficiency and productivity as well. Next one, disadvantages of standard costing. Since standard costing involve high degree of technical skill, it is therefore costly. As such, small organization cannot introduce the system due to their limited financial resources. But once introduced, the benefit achieved will be far in excess to its initial high cost. The executives are liable for those variances that are found from actions which are actually controllable by them. Thus, in order to fix up the responsibilities, it becomes necessary to segregate variances into non controllable and controllable portions, although that is not an easy task. Standards are always changing since conditions of the business are equally changing. So, standards are to be revised in order to make them comparable with actual results. But revision of standard creates many problems, particularly in inventory adjustment. Standards are either too liberal or rigid since the same are based on average past results, attainable good performance, or theoretical maximum efficiency. So, if the standards are very high, it will adversely affect the morale and motivation of employees. Thank you.